Broadcast is now starting. All attendees are in listen-only mode.
Oh, it's Alec Hogg here, and a warm welcome and it is a warm day here in Johannesburg. Let it remain this way for as long as possible and burn those little COVID-19 germs to kingdom come. But anyway, that's not what we're here to talk about today. By the way, just before we do actually move on, we've been doing a daily podcast on COVID-19. So please, if you are interested in what's happening, and everybody should be, certainly if you follow what's happening around the rest of the world, we are not quite into anywhere near the teeth of the storm yet here in South Africa, but we will keep you updated there, and you can search for Inside COVID-19. It's well positioned on the Biznews website, and it's also in our Spotify and iTunes, and of course in our iono.fm account for Biznews. So it's all there. We put a lot of effort and energy into it to keep you updated with it, and it's just going to get more and more interesting as we go forward. But something that is very interesting is this portfolio of ours. Remember, we began the portfolio in December 2014. The whole idea was that Standard Bank Web Trader had begun, and Brett Duncan from Standard Bank Online Share Trading said to me that they wanted people to get to know about Web Trader and how Web Trader worked, and the best way to do that would be to have a model portfolio. So we did that. We started a model portfolio, and that is what this monthly webinar is all about. It's updated every month, and as a Biznews Premium subscriber, you can go into the site, have a look at every single one if you feel that way inclined, going back to December 2014. So it's been going for 5 years and 3 months. So call it 5.25 years. And the performance of the portfolio has been quite extraordinary, not least during these last troubled times. The idea of having an offshore portfolio for South Africans is to offset the decline in the South African rand. You could take your money and put it into a hard currency and work it that way. But our whole strategy was to say we will take the money offshore and invest it into stocks, which should be giving you a better return, provided you don't throw the money or buy the wrong stocks over a longer term period. So that's really the background to the portfolio. And we did in September last year start bringing some of the money back to South Africa, premature, but that's what happens to value investors. I'm afraid we always see the brightness before everybody else, it appears, and then you've got to grit your teeth. But no problems, generally speaking, because the way that the portfolio is positioned is for the fourth industrial revolution. It's really lucky. It's no brilliance on anybody's behalf, but because I'm managing the portfolio, and that's my background. I've been in the digital field for more than 2 decades. I was fortunate enough to leave print journalism and newspapers and old style television in the early 90s, and then in 1997 started one of the first internet publishing companies in South Africa, and have been by force in that field. So I've seen companies like Amazon and Apple, etc., how they develop and how they've been moving forward. And I guess it's just good fortune of being in that spot, so I could see how the world was developing on a day-to-day basis, because it was my business. Anyway, so that's the story. I've named this webinar Calmer After the Storm. Today it's hardly calmer. The JSE is having a gangbusters day. We had 11% jump in the Dow Jones Industrial Average in New York last night, after the American group, the Congress, together with the White House, agreed on pumping in $2 trillion to offset the negative impact of the coronavirus. So they're creating money pushing it into the economy to make sure that the knock that the Americans take because of the coronavirus is going to be offset. Now, you could look at this one of two ways. The way that we've preferred to look at it, and it'll come through more and more in this conversation, is that if you get more cash put into the system, then asset values will improve. They will improve perhaps because of inflation, because there's just a whole lot more cash to go around. And when we talk about equities, we talk about companies, and the company themselves are assets. So as a consequence of that, we believe that the market is still a very good place to be, and particularly in the stocks that we've invested in, which are exponential shares. Now, exponentiality is something that's a bit hard to get your head around, but in a stock perspective or an equity perspective, if you're buying into shares that are benefiting from a restructuring of the economy and growing as a consequence 20-25 or plus % a year. We've got one we're putting into the portfolio today that's growing at 50% a year. But if you get that, it's very hard for most people to get their heads around exponentiality because we aren't built that way as human beings. And it's a similar thing with the coronavirus, that it is now starting, the infections are starting to go exponentially or rise exponentially, and we can't yet feel exactly what it's going to be like, especially not here in South Africa, where we're sitting at about 550 infections at the moment that we know of anyway, and that's very low in a global perspective. But it has gone up very rapidly over the past few days. But exponentiality is something that one needs to read about, needs to get some insights of. I've been very fortunate just after Biznews started in 2013, early 2014. We were the media partner to cover the visit of Singularity University to South Africa. And that opened my eyes completely to the power of exponentiality, and came at the right time for this portfolio. So all round, that's a little bit of background. How did we do? That was a portfolio at the end of February. Those of you who were present at the roadshow, Durban, Joburg, Cape Town in early March, will have seen this before. You'll also remember that at the roadshow, I said what we would be doing was the next opportunity, which is now. We don't change the portfolio in between webinars. We only do that at the webinar, so it gives you every opportunity to follow this model portfolio. I did say that we would be adding to the portfolio Discovery and a few Sasol shares on the South African side, and selling that top 40 ETF. And I also said that on the international side, we'd be selling Berkshire Hathaway and would be investing into Spotify and Cloudflare. So Spotify would be the big one, Cloudflare the small one. They are also exponential companies. As far as the South African sense is concerned, even at what was Sasol then over 100 Rand, 150 Rand a share, it looked incredibly cheap. And now it's at 25 Rand. Well, anyway, so I'm not going to be deviated from the idea that we'd put most of the investment into Discovery, but also take advantage of the ridiculously low price of Sasol. So we've done that as well. But what I wanted you to see is this. There's the portfolio at the end of February, and the value in rands is 6.77 million, you can say. The portfolio today, on the 25th of March, after the fire and fury, if you like, of Mr. Market, is 6.76. In fact, if you want to make a point, you could say, well, 5 is, you always round up from 5, so it's 6.77, which means it's virtually unchanged in Rand terms. I think I'm just going back here, so it's 6,769,000, and today is 6,765,000. So I think that kind of puts into perspective the value of being a South African investor internationally, because what we've done here is we've structured the portfolio into exponential stocks, and you'll see that they haven't done badly at all relative to the whole market. And we've also taken advantage of our currency, investing from the Rand into these exponential stocks in the US, staying away from old economy shares, and really buying into those companies that have got a good growth runway ahead of them. And it's paid off spectacularly. Just having a look at the annualized returns, and there you have at the end of February. So this was when I went around the roadshow and I said, look, these are ridiculous. You can't make in 5 years an annualized return of 39% compound indefinitely. It's just not possible. But so please don't bank that and say, well, in the next 5 years, we'll make 39% as well. It has been an enormous outperformance, but perhaps favored by the fact that we've been investing in the new world, in the fourth industrial revolution, before it even was the fourth, anyone even called it the fourth industrial revolution. So that's again, gets back to that little bit of luck. It just happened to be that that's the world that I've been working in for the last 25 years. And as a consequence of that, I understand these companies perhaps better than I do other companies. And so you put a model portfolio together, what do? You put in the companies that you understand. In US dollar terms, at the roadshow, it was still looking at 24%, pretty good going for just over 5 years. Today, the portfolio is, my goodness, no, let me just get that one. Oh my goodness. Okay, I'm trying to just move this forward. Sometimes Apple and Microsoft don't work too well together. So let's just see. There we go. Okay, annualized returns today. My apologies. As you can see, the US dollar annualized return is down to 18%, but the rand is virtually unchanged. So we were sitting in the previous at 39%. Now we've got a rand annualized return of 38%. Extraordinary. And the reason for that is going to be shown to you now, that the crash on the S&P 500 index, and there you have it from the peak to the trough, was 33%, and that was in super fast time. The peak was just around, well, going towards the end of February, and the trough perhaps was yesterday, and that was a 33% decline. But the rand over that period has gone from 15.48 when we last reported to you on this portfolio to, well, this morning it was sitting at 15. Over around 1740, and you can see that it's not just the rand that has done this. Here is the rand against the British pound. So you don't have to rush out and now start canceling your Biznews premium subscriptions. I mean, obviously you never would because it's such great value, but the British pound and the rand have virtually done the same thing against the dollar. So you've had the dollar that's been extraordinarily powerful, and the rand has been weak, as have every other currency pretty much in the world. So that's a little bit of background before we go into the changes in the portfolio. I'm hoping that that everybody's hearing this, I presume, because I can see the numbers of attendees are rising. But my colleague Stuart Lowman is also on the line. Stu, do you want to just go through the technical stuff?
Thanks, Alec. Yes, everyone can hear you. We've got a few comments on that, so that's perfect. For those who are new to this webinar, we do like to keep it conversational with Alec. So on the control panel on the right-hand side, there's a little questions drop-down bar. You can plot your questions, and then I'll pass them on to Alec, and we can sort of deal with them like that. Alec, otherwise everything's good technically, sound's coming through lovely, and pictures clear. So thanks a lot.
Perfect. One never knows on technology, so my apologies for not actually working that out earlier. And Stuart will interrupt me from time to time to say, here's a question on X, Y, Z. Okay, so that's the background. And as you can see, it has been a portfolio that has been structured even to resist COVID-19. Extraordinary. It wasn't done that way, but this is the way it's worked out. So let's have a look at what we're going to do about it, because as I said earlier, during the roadshow, the point was made that we're going to be getting out of our last old economy stock in the US. That's Berkshire Hathaway. It's a great company. Warren Buffett, I've even written a book about him. So to make this decision has not been easy, but in the 5 years, it's very interesting when you have a look at this graph or this chart. The return from Mr. Buffett has only been 10.75%. So Berkshire Hathaway that we bought when we started the portfolio on the 5th of December 2014 at call it $150 a share, after the movement last night was at $178 a share. And you work that out, it's a nice profit, 67% profit over 5 years. In fact, it's better than the weakening of the rand. The rand's about 55% in that period. In other words, if you had taken rands, put them into US dollars, they would be worth 55% more. So Berkshire has outperformed the rand, but not by a whole lot, as you can see there. So 10.75%, it's been a reflection of the old economy kind of businesses that are inside Berkshire Hathaway. You might believe that because Buffett has been sitting on a lot of cash, well over $100 billion in cash, and because he's had a huge investment in Apple, that's his biggest investment of the whole portfolio, that he'll be able to take advantage, or did take advantage of the very low prices that were available in the last week or so on the stock markets, and that is going to enhance Berkshire's returns in future. But he also told us at a number of the annual general meetings that Berkshire is now so big that and size is an anchor to performance. So he's well positioned. It's a bit like a utility. If you were thinking of investing money into, or taking South African money offshore, putting it into a safe haven and just letting that grow, well, you couldn't think of a better place to put than Berkshire Hathaway. But we're right, we've sold them in this. Remember, it's a model portfolio, so we sold at yesterday's prices. And then this morning, at about 10:30, I had to do a cutoff with all the compilation of the prices and so on. And the way the market's moving at the moment, one doesn't know. So you have to have some cutoff. But we sold the ETF. I've had, as I said on the roadshow, very, very bad luck with ETFs. Every time I've invested in an ETF in this portfolio, and I'm sure you've come along with me, we've lost money, everyone. So rather than going in that perspective, we're going to continue to hone in and focus on the stocks that we believe are better positioned for the long term. And the top 40 ETF has been sold this morning at a loss of 20% in rand terms. In US dollar terms, it's even worse. But that's the story, and that's what we've done to raise the money. Now, the usual strategy that we have when we invest in stocks is that we stagger the purchase. We do the sale immediately, but then we stagger the purchase over 3 months. We've done the same, and the reason for this is to try and take timing or pricing out of the equation, particularly in the global markets. Because the problem there is you're not only talking about the price of the stock that you're investing in, but you're also talking about the volatility of the South African rand. So that's a good strategy, and it's one that's worked really well for us. And we're going to continue on that line with the purchases that we're doing offshore. The rand at the moment, as you might have been following today, has picked up something like 50 cents on the day already, just because there's a turnaround in the perception about how the world is going to be fighting this war or winning this war against coronavirus or COVID-19. In the local market, though, the rand is obviously not a determinant. You're buying directly into shares that are listed on the market, and here you need to apply Benjamin Graham's view, in my opinion, and that is the company giving you a good margin of safety at the current share price? And the two stocks that we've bought into are showing such massive margins of safety that I'm not so sure they're going to stay there for very long. And as a consequence, we've now made our decision, and we've allocated the whole of the funds that came from the ETF, that's top 40 ETF, and we put them into the stocks here. So just to recap, the money that came from Berkshire Hathaway has gone into 2 American stocks, which will be purchased over the next 3 months to take the rand volatility out of the equation. The money that has been put into the South African shares on the JSE the purchase is being done completely over today. Okay, hope that makes sense. And just to show you what happened there in dollar terms, the sale of Berkshire Hathaway raised almost $18,000, of which we've put around $6,000 into those 2 stocks. We bought 32 Spotifys and 80 Cloudflares. Those of you who were on the roadshow or came to the roadshow, or indeed have listened to the podcast of the roadshow, which is on Biznews Premium and freely available for you to read and listen, will know that the reason I like Spotify, again, it's my own world. We are seeing that our recordings and activities in the podcasting field are starting to grow very, very rapidly. And this is something that has happened internationally. Podcasting has become the next big thing. So for me, it feels like in 1997, when I started MoneyWeb as a little internet website, and knowing then that this was something that was changing the world, but not knowing how rapidly it was going to change the world or what kind of scale it was going to get to. Of course, I had no clue that the internet would be as pervasive as it is now. We did think when we listed MoneyWeb in 1999 that it was going to take over the world, but we thought it would happen in a few years, not in the period that it has. And I was reminded the other day of a statement that Bill Gates made in a book he wrote around the time, where he said that we always underestimate the long-term impact of revolutionary changes, but overestimate them in the short term. And that's exactly what happened with the internet. Right now, I think we in South Africa are massively underestimating the way that podcasting is taking off here and taking off around the world. Elsewhere in the world, it's become quite obvious that you shouldn't need to have what is called appointment consumption. In other words, going on to a radio show that, say, my old colleague and friend Bruce Whitfield, he goes on air at 6 o'clock in the evening. And if you aren't in your car at 6 o'clock in the evening to listen to Bruce's show, you lose it if that's the way you think. However, there's a podcast of the show, so you can actually consume it anytime you want to. And that's exactly what has transformed television and is transforming radio today. And if you have a look at the way that television by appointment or viewing by appointment is still in its relatively early stage, podcasting or audio consumption by appointment is even further behind. But the growth is exponential. Why Spotify? Spotify, you'd say, but they're very big in music. Yes, they are. But they've also invested massively in podcasting, and they've seen it as their next big play, and recently did a substantial acquisition of one of the leading podcasting companies, although it's very early days at the moment. It's a bit like, I suppose, someone buying Yahoo when the internet started around 1997. So it's a similar kind of thing. Spotify, I think, is putting their chips on the right numbers on the table, and we'd like to have a little slice of that. The shares were over $150. They've now come down in this market crash, in the correction, and they today were up quite nicely. They've risen quite nicely in the last few days at $129, still good value. Cloudflare is a different proposition entirely. This is a company that is hugely valued. The market cap of this company is around $6 billion. They only have turnover revenue of under $100 million, but of the $100 million, they bank about 80% of it as profit. So what is Cloudflare? It is the gold standard in internet security. So if you have a website like we do at Biznews, and there are people who don't like you or don't like what you're putting onto the website, they can attack you with different vehicles. There's something called a denial of service, where they get robots from all over the world and just ping your site and eventually bring it down. We've had that a few times in the past few years. In fact, I think it's happened to us 3 times, but not since we implemented Cloudflare, which was born in the Israeli army, which a lot of these technological innovations do come from the military side. And when that was implemented into our site, we haven't had a problem. We've had a lot of attacks subsequent to that, but Cloudflare is able to knock it back. And the great thing about Cloudflare, it only costs $20 a month. So what they've done is a little bit like the Steve Jobs recommendation, which is keep the pricing low and go for high volumes. And they are really pretty ubiquitous now. Anybody who understands technology and needs or understands the need for security would recommend you first go and look at Cloudflare. Obviously, there are higher levels of security. If we get a really bad attack, we can temporarily pay a couple of $100 to fend that off. And with big corporations, they would be paying Cloudflare a lot more than a couple of $100. But that's a company that is, to me, it's got the future going for it. And even though it's extremely highly valued, it isn't a stock that, and we haven't put a huge amount of money into it. I think it'll end up at maybe 3% of the portfolio eventually. It's one of those that could be literally anything, a little bit like what happened with our investment in Amazon. On the JSE, and so both of those, incidentally, we've now invested 1/3 of the cash that because they are international, we're trying to take the Rand element out of it. On the JSE, the purchases that we've made, as I did say in the roadshow, were and they were made this morning. Discovery and Sasol, 70% of the cash raised into Discovery, 30% into Sasol. Similar story in Spotify and Cloudflare. 70% in Spotify, 30% into the less or the higher risk option, which is Cloudflare. Only higher risk because it is so hugely valued at the moment. Sasol is potentially a higher risk, but every bit of research that I've done tells me that this company is being incredibly undervalued, whereas Discovery is the safer option, and it's hugely undervalued as well at that price. We've said a lot about Discovery on Biznews and not also on the road shows as well. So those are the investments we've made. As mentioned earlier, we've taken the full amount of money realized on the sale and taken advantage of what we think are incredibly good value prices at the current levels. So here's the portfolio as it now looks. As you can see, our biggest stock is Amazon. Amazon actually has risen since the crash. Short was over $2,000 a share at the peak, but in the last 3 weeks, when the crash really came through, Amazon has at least held its price in dollar terms, and with the Rand falling as sharply as it has, it's given us a lovely uplift on the portfolio. And really, when you see that in 5 years, it's a stock that's risen 500% in US dollar terms. You don't have to be terribly clever to deliver an incredible performance as this portfolio has done. So we thank Jeff Bezos every time we have a look at this portfolio, and I guess we should thank him again. There's no question that Amazon is perfectly positioned for the future and the fourth industrial revolution. So too is Microsoft. Microsoft Teams has been growing like topsy in the last few days, and as a consequence of that, Microsoft itself has been going up. What is Teams? Teams is the equivalent of something we use at Biznews called Slack. It's perfect for remote working. Remember, at Biznews, we've been doing remote working for, well, since we started, 5 years, more than 6 years. And we can see that these products are really, it's massively efficient. And that's Microsoft Teams is not the one we use, but everything I know of it, it's something we need to have a look at. We use Slack. We're happy with that at the moment. Apple, the stores in China being reopened now, given that China's passed the coronavirus worst point. There was discussions at Apple, in fact, this morning on the Wall Street Journal, our partners, there's a story about Apple now looking to reopen its stores elsewhere in the world. They haven't given any more details. Apple's quite a secretive company, but it does show you that this is a business that is, again, crash-proof. Adobe Systems, one of the best software companies in the world. The story there is that, again, it is a remote or a company that sells remotely. You don't go into Adobe stores to buy the product. You can buy it through the internet. And of course, Netflix, which is a beneficiary of the coronavirus isolation period that is with us now just about in South Africa and will be else in many parts of the world as well. If you're at home twiddling your thumbs, what do? Netflix. Spotify, which I've spoken about before, has been added, and then Cloudflare as well. On the South African market, you can see Naspers, in fact, has gone up in the last 3 weeks. And Richemont has been a bit disappointing. But still, from just over 100 Rand a share to 96 Rand a share, it's well positioned for the fourth industrial revolution, given the underplayed partnership with Alibaba in China, and also Netflix. Net-a-Porter, which is it did a big acquisition of an online luxury shopping operation, and the numbers that are coming through from there, the revenues that are coming through e-commerce sales by Richemont, are now amongst the best in its industry, in the luxury goods industry. Around about 1/8 of its sales are done online. So it's got the China factor and it's got the online opportunity. It's not a stock to be selling at the moment. And Stu, I think that's the formal presentation through. Let's get into those questions.
Thanks, Alec. Anthony just wants to ask if you have any views on Splunk. I'm not sure about it myself, but I'm not sure if you do.
I don't know. That's outside my circle of competence. Sorry, Anthony.
Perfect. Andrew just wants to know, would you please remind him what you would advise the minimum dollar purchase amount on WebTrader into any one share at one point?
I think that's something that you're going to have to do it on your own, do your own calculation. I know on the Standard Bank online share trading platform, of which I'm a very happy customer, it was about 10,000 Rand per transaction that started becoming it was around that level where if you're buying anything less than that, you are going to get penalized by the prices that are charged for doing the trade. Whereas on the international, I haven't looked at that yet, Stuart. So I think one must just do the calculations generally. But if you work that back, it would be $500, which seems a bit low. I guess in these things you should be looking at $1,000 plus.
Thanks, Alec. I know we don't do currency speculation. Arrested just wants to know if you have a view on where you think the dollar might be heading against the Rand.
Yeah, it's very difficult to predict. If you'd taken a view 3 months ago, you would have said that in the long term, the South African Rand would be a little weaker. We've got more debt. We've got more a slower economy. We've got an economy that needs radical transformation to really see its potential and so on. But you would probably, and that's not just against the dollar, you'd have said that against all hard currencies. And yet, during this crash, the Rand and the pound have virtually gone in tandem. So when you speculate on currencies, you really are taking, you may as well go, I think you may as well just go to the races and have a bet on a horse, although you can't do that anymore. So I don't even, maybe casinos are the place to go, although you can't do that anymore in South Africa either. But it isn't investing. Investing is a place where you go to put your head down at night and to sleep peacefully and calmly, because you know that if there were a closing of the markets for the next 5 years, you've done sufficient homework to believe that the value that you've of the asset you've acquired is going to be worth more in 5 years' time. And I think this is a really, really good point that we need to just dwell on when we have a look at this portfolio. Every one of these stocks, I believe, in 5 years' time will be from, well, I believe doesn't really matter, but every one of these stocks, my research tells me that in 5 years' time will be worth more than they're worth today, and that they will appreciate at a faster rate than the economy generally. When you look at the Rand versus the US dollar, the immediate gut would say, but the dollar has been so incredibly strong during this COVID-19 crisis. And as a consequence of that, when the COVID-19 crisis comes out of the system, then the dollar would presumably start easing back a little bit to more, in inverted commas, normality or more normal areas. But how long is the COVID-19 going to be with us? If you have the approach that the Americans seem to be taking, where they're worrying more about the economy than the people, it's a very big statement, that. But if you have a look there in New York, where it's as bad as in Italy now in the infections and the way the infections are going up, there's been very little done to confine people to barracks until only now. So America's been very, very slow, and indeed it hasn't got a national policy on how to handle COVID-19. Yet they've put $2 trillion into the economy to offset it. So it's almost like, well, okay, people are gonna get sick. We're gonna have a hit, but here's money, so our economy can keep going. Whereas in South Africa, where we have far less firepower than the Americans do, we've taken a view to look after the people and acted very early. If you look at the John Hopkins website, and I'd urge you to do that if you want to understand how the infections are going and how exponentiality is running, you can see there that South Africa is way down the bottom of the countries in infections. Now, let's hope we stay there. What the president did this week gave us a very, very good chance of achieving that. So when we come out of all of this, and you then look back at the relative value of the rand versus the US dollar, you will at that point in time have to make a reassessment. But we don't know. We know so little about how the world goes to war against germs. We do know that we're learning every day, and we're getting better at it, and we'll be better at it the next time around, because there will always be a next time around. But whether the approach that we've taken in South Africa is the one that is going to assist or hurt the South African rand in the long term, we'll only know in the long term.
Thanks, Alec. Henny just pulled one out the locker here. He wants to know, what's your view on Metro Bank? It's fallen substantially.
Yeah, Henny, I love it, man. I mean, as a customer of Metro Bank, and when we were in the UK and now, because we have a UK business, you can't get a better bank than this one. They are amazing. They opened later. They're very quick when you send them emails. They're incredibly responsive. The fees are so much cheaper than the other banks. So every logical thing in my brain says to me that this is the UK's equivalent of Capitec. And if we look at what happened in Capitec in South Africa, wouldn't you like to go back 10, 20 years and invest in Capitec shares? The thing with Metro Bank, what happened there was that they made a misstep, and a bad misstep, about a year to 18 months ago. And that was when we sold it out of the portfolio, thankfully, at £33. It's below £1 today. And that was when evidence started coming out that the founder and chairman had been paying his wife without really going through the proper channels, which then sent a few alarm bells ringing to say that once scandal begins at a company, you never know where it's going to end. Warren Buffett says there's never only one cockroach in the kitchen. And as a consequence of that, we got out of the stock. I think it was in this portfolio. We might have made a very small loss on it. And today, that stock would be really, really bleeding had we not taken that decision. And it's a very, very good reminder. When there's scandal, as much as I love every single share that's in this portfolio, when there's scandal of that type, should that too happen to any of these stocks, we would do the same thing and we would sell. So Metro Bank today is sitting, I think it's around 90p, so below £1 a share. It's at a fraction of its book value. All the banks in the world, or most of the banks in the world, are trading below book value, an unusual circumstance to be in. Koki Koeman, in the interview we did last week, was talking about banks in the UK that are at 0.3 times book value. So in other words, you buy the bank, you liquidate it, it costs you 30 pence, and you get £1 back for what it's worth. And the brand is coming in for free. So banks are very, very cheap relative to history. Metro Bank has always been one that's been hugely valued or highly rated, because it has been growing so fast, and it's grown so fast because customers love it. But the future there the share price has been affected by the misstep that they made in not classifying some of their liabilities correctly. And as a consequence of that, the competitors who are much bigger have jumped on it. And the strategy for Metro Bank now is recovery. It isn't a strategy of aggressive expansion anymore. But is it a good bet at 90p? Well, we thought it was a good bet at £33 before the scandal hit. I think that all of the bad news has got to be in that price.
So while still in Britain, Alec, Maureen wants to know if you know of any good shares that she could buy that are listed in the UK.
Well, there's I'd have to think about that one. If there were stocks that we would be wanting to purchase, we would have them in this portfolio. So I think that's really the way to answer that question. There are a lot of great companies in Britain, but the heart of capitalism is the United States, and the heart of the fourth industrial revolution stocks are in the United States and China. To me, you can go and buy a Rolls-Royce if you understand the company well, or various of the other industrial companies. But the problem you're facing there is that they aren't exponential businesses anymore. And I think we really need to get this into our heads very clearly. Invest in those companies that are positioned for the new world. It's very hard for most of us to grasp what this new world is like. But I think over the next 3 weeks, when we are confined to barracks in South Africa, we're going to get a very, very good idea about this. Sometimes you need a shock to the system for the transition to occur, because the antibodies of the status quo are incredibly powerful. And my problem with the UK stocks and the UK itself generally is that they haven't really nurtured the Silicon Valley type operations yet. I'm sure they're coming, because the Brits are very smart people, and they have per capita the best universities in the world, and you will see that starting to manifest itself, no doubt, in very exciting companies into the future. I just don't know any of them at the moment well enough to be able to give you any suggestions on that. But what I would say is start looking, start doing your homework, start doing your research, start reading up maybe about the biotech stocks. Think of this way: if you've got Oxford and Cambridge, you've got really smart people at both of those companies making interesting discoveries all the time, applying that knowledge to a commercial sense, and those commercial operations could, for instance, be the ones who deliver, imagine, the vaccine for COVID-19. Imagine what's going to happen to that company, wherever it might be. So it's one of those things that you just need to start doing your own homework, and you'll find the gems.
Thanks. While on that 4i concept, Meryl wants to know your thoughts on Zoom. Obviously, the new billionaire in the 100 billionaire list there after the COVID crisis, Alec.
Yeah, Zoom has been quite an extraordinary business. If you consider, we use here GoToWebinar, who've been around for quite a bit longer, and this is a very secure and strong platform. But Zoom was not only competing with GoToWebinar, but it was competing with Google Hangout. And there are other options that you can have elsewhere, and it's competed extremely, extremely successfully. I did look at it, and I did think that it was a possibility for this portfolio, especially now that we're all going into lockdown. And once you start using a tool that you're almost forced to use, you find that it is so efficient that you'll use it thereafter. Just think of your consumption of media. This is bad news, this COVID-19 for established media companies, because media consumption is a lot to do with habit. I get my newspaper every day, and I read it, and I renew, and so on. If it doesn't come for some reason, I might look at something else. And it's a similar thing here with Zoom. What we've done at Biznews is we've done a lot of webinars like this. Now, the alternative would have been for us to actually all fly to one venue and to have eats and drinks and and hire a big hall that we pay someone a lot of money to do, and then get together and have a chat as we do in our physical webinars around roadshow around the country, or do a webinar like this. So Zoom is one of the beneficiaries of this massive leap towards the fourth industrial revolution age. And I guess it might have overdone it in the short term, but if you go and look at their financials and you think about the philosophy of what this company is about, I'd certainly be watching it to see when the heat comes out of the share price to have a small investment there, a little bit like Cloudflare. It is something that is going to only get stronger and stronger as you go into the future, unless, and there's always this big unless, the majors, the giants, the FANGs, Facebook, Amazon, Apple, Alphabet, Netflix, come along and go into that field as well. But what we've seen from Netflix is not included there. What we've seen from Netflix and Spotify is that independent players somehow just seem to have an advantage, and they don't get crushed by the big players. The competition makes them even better. I think Zoom is probably going to fall into that category.
Excellent. Just a couple of questions on Sasol, Alec. Paul just wants to know, are you not worried about continued low oil price and the upcoming debt payments?
Yeah, Paul, I've done quite a lot of work on Sasol because when you see a share price dropping 90%, you really have to have quite strong conviction to have the decision or make the decision as we have to put it in the portfolio. All I can go by now is that there is a very strong level of governance at Sasol, even stronger now, subsequent to the problems they've had and the departures of the former joint CEOs. The chief executive and the board are certainly not going to be saying anything that isn't 100% accurate. That's my assumption. And when I read through the information that has been put into the public domain by the company, it tells me a few very important things. The one is that at $25 a barrel, Sasol is profitable. Now that's without taking into account, as I showed you earlier on this portfolio, the benefit of the South African rand. And don't forget that Sasol, the lion's share, what Sasol makes, comes from the rand price of oil. So in the same way as many of the stocks that we have in this portfolio have benefited from the rand's decline, Sasol will also be benefiting. It offsets to a large degree or to a significant degree the fall in the oil price. That's the first thing. The second, so they are profitable at the current oil price, and that's really on a conservative rand calculation from their side. The second thing is the debt repayments, and primarily these revolve around Lake Charles, the Louisiana investment, the big chemical plant there. Those debt repayments, we are told by the company, only start kicking in about 18 months' time. So they want to be sure that they've got $2 billion in cash at the moment. They want to be sure that they've got more cash, $6 billion they're looking at, by the time that they have to start repaying debt. So this is not a company that's heading into a disaster, into a brick wall and not doing anything about it. They're looking at the future and they're saying, we are building a business for a $25 a barrel oil price. And the third thing is that that's unrealistic, because $25 a barrel for oil is surely unsustainable. And the major reason that you can say that with some conviction is that when the United States started turning around dramatically in its energy equation, it was a consequence of fracking. But fracking, or hydraulic fracturing of gas reserves under the ground, fracking is an expensive process. You don't just put a pipe down and out comes oil. You have to pump in a liquid to liberate the gas, the shale gas, which sometimes can be quite deep and quite a long way down. In fracking's case, the average price on a direct conversion to a barrel of oil is around $60. So now imagine you have $25 a barrel oil price. you're going to put out of business a large percentage of the fracking companies in the United States. Suddenly you don't have that supply into the market. And from real basic economics, when the supply dries up, the demand is relatively stable, you then have to have an increase in the price. And that's the way I'm reading this. In 18 months' time, hopefully we don't have a repeat of COVID-19, but COVID-19 will be a nightmare that we kind of forget about as we carry on with our lives. China's showing us that it's maybe 3 to 4 months of intense problems, and thereafter things settle down. That's the suggestion of it. It's very unlikely, given the mortality rates that we've seen, that this is going to be still with us in 18 months' time. It could be, but it's very unlikely. As a consequence of that, the oil price at that point in time will be better reflecting the supply and demand equation, and that is going to be influenced to a large degree by the supply from the United States of fracking actually being turned down hugely. So when you look at Sasol from that perspective, you ask yourself, and remember, this is a company that delivered 30 Rand earnings as recently as 2017 in a normal environment. So if it can deliver 30 Rands in earnings per share in earnings, and you're buying it for under 30 Rands per share today, and you put it into the bottom drawer and forget about it, and please, you're going to have to do that because there's likely to be even more volatility. And we've got down to nearly 20. I didn't believe it could go below 50 Rand, let alone below 30 Rand. But when Mr. Market gets the bit between his teeth, one just never knows where he's going to end up. But there will be volatility. If you're buying Sasol today as we are, we're looking at it as a long-term play. And in the long term, with the assets that are sitting in that balance sheet and the value of those assets, even if they were to be sold today, is a multiple of the market capitalization. And I guess the real question here is to say, when you buy a share in a company, remember you're a co-owner of a company. And if the company is one that Mr. Market is just throwing away because he doesn't believe there's any value to the assets that are in that company, if you can pick up those assets for a fraction of the price, then you surely are doing something sensible.
Thanks, Alec. Alan's got a question I think we get every webinar. Amazon holding up well. Is it still a buy?
Yeah. You know, if it's in our portfolio, then it's there for a reason. I'm of course at $1,950. It's not as much of a buy as it was at $327 when we bought it, but it is still a company that I will be happily holding in 10 years' time. The business model is irresistible. We in South Africa don't quite feel the value of Amazon, whereas if you lived in the UK in particular, where I have direct experience, it's an extraordinary business. You go onto Amazon, do your shopping there, and it gets delivered within 24 hours. What's now likely to happen, and you've seen it with Ocado, the online grocery, what Ocado does, and I'll bring this back to Amazon in a moment, but what Ocado does is it doesn't have any stores. It operates with stores like Morrison's, I suppose would be like Checkers in South Africa, and you then go onto Ocado to do your shopping only online. That has been so hugely overburdened in the last few days as Britain has gone into lockdown in the same way as we're about to go into lockdown, that it takes an age to get onto the website. They didn't expect that they would have this kind of traffic and this kind of volume. Amazon, on the other hand, gets that every day. And it's always been investing in growing the online shopping area. So if you have an old economy where human beings, being creatures of habit, are now suddenly forced to re-examine those habits and have a look at what is more efficient into the future, you will immediately realize that Amazon is not in a negative situation from this transition. In fact, it's even more appealing than before.
Thanks, Alec. I think we can end off with this question. There's a few stocks that the audience would like your input on. It's local stocks. There's 4 of them. It's Curro, MTN, British American Tobacco, and Aspen. I'm not sure if you've got any thoughts on that.
Yeah, well, I think the people asking the questions have probably done a whole lot more research into those individual companies than I have. So all I'm going to offer is a broader perspective, starting with Curro. Curro is a private education business, which in a South African context has to be in probably the most appealing growth markets. However, I'm not sure, and this is what I would do before I bought Curro, I'm not sure how well positioned they are for the online learning revolution. We do know that the Tupac brothers from Cape Town, who've now reignited a new online school, will be going more aggressively into that field. If Curro is still working on the old model of forcing children to go to a central place where they will be taught by a teacher in a classroom, I think there could be some question marks against that model in the long term, because what we're seeing now more and more is through this lockdown, through the forcing students, young people, to spend time at home and actually to learn remotely, it is going to bring big question marks to the way things used to be done. If you like, from a Curro model, it seems obvious. You've got a dysfunctional, to a large degree, public education system. So if you bring in a private education system, people are going to be prepared to pay premium prices to get their children to go to that side. However, if that then gets disrupted by the next area, which is private education, but cheaper and done remotely, well, it's no longer such an obvious one-way bet, is it? So that's what I would say philosophically about Curro. MTN, it always worries me when a chief executive who's been boomed and brought in from another part of the world and then leaves relatively soon. And that's what's happened with Rob Shuter. He was brought here from a top position in Europe with Vodafone rather, and he's not going to continue at MTN. And you wonder what's happening there. I like to invest in companies where the management are there forever. That's the only company they're ever going to be at. I mean, that's obviously unrealistic, but it is I love founders. Think of Naspers with Koos Becker, and Bob van Dijk was plucked out of eBay, properly remunerated or incentivized so that he would come to what was obviously a much smaller business in Naspers, and now you're seeing the value of that for Bob. Richemont, you've got Johan Rupert, who's still very, very involved with Richemont and its strategic intentions. Discovery, Adrian Gore and Barry Swartzberg are there as often as their most dedicated employee, and they're the co-founders of the business. And Sasol, on the other hand, is I think we've said that it's like a commodity company where the commodity is just that cheap, that slow. And if you go through the other companies that are in the mix, they're all the US companies. They all focused in that way, where it's almost like owner managed mentality. So that to me is a concern that I have with MTN, given that what Rob Shuter is doing. It's a very highly contested field, and MTN's fighting against a couple of big things there in Vodacom, which is a fantastic business and extremely well managed and run, and the Nigerian issue, which doesn't seem to ever want to go away. Stu, what were the other two?
One I know you won't be a fan of is British American Tobacco, Alec, and Aspen.
Yeah, BAT, I know some people believe that you should put your ethics hat away when you're buying shares. I just don't. I can't believe that any company that's got the exposure to a world that's becoming more healthy and more concerned about the unhealthy operations, can have a long, or certainly not an exponential growth future. And that's what one should be looking at here. It's got its fans. I'm not one of them. And Aspen, well, it gets back to that owner-founder. He's there. Stephen Sard is still at it. They've had Big Pharma all over the world has had a very, very rough ride the past couple of decades. Suddenly, the rest of society is saying, hang on, but we need these guys to be finding us the drugs that will prevent an outbreak of the kind that we're seeing now, or at least give us some defense against it. But because Big Pharma's being crushed by societal pressures, there hasn't been the research and development that is required. Somebody needs to be investing in research in the drug field, and you can't just leave it to the startups. The established players have got to be in there as well. And I think that if there's one thing that COVID-19 is going to teach us, that is that we need companies like Aspen to flourish, to succeed. You know, you'd never, ever find any politician wanting to squash banks, because they understand that if you don't have liquidity in a system, and if you don't have good, strong banks, you don't have liquidity in the system, you really are exposed to enormous risks. Whereas on COVID-19, we're suddenly seeing that there is a similar risk from microbes, from germs. And those defenses, or those soldiers who are fighting against it and protecting us against it, have really been given a rough ride for some time. So maybe Aspen's time is coming. Maybe it's coming. But you certainly have in Stephen Sard a very dedicated entrepreneur, founder of the company, extremely talented. And if you go along with that philosophy that you should be backing the jockey as well as the horse, you wouldn't find many better jockeys than him around.
Lovely. Thanks, Alec. As always, thanks for your time. I know we're very busy at Biznews, obviously, with the COVID outbreak, so this is fantastic for the webinar today. Just as usual, for everyone listening, we will post the video on the website as soon as possible, so you can catch up, and the presentation will be available on the premium sites. So we'll do that as soon as we can post the webinar.
Yeah, and I'm just going to make mention quickly of our app. We really love it. As I mentioned before, we're making a big investment now into podcasting, and if you go onto Biznews, you'll be able to pick up the podcasts, or if you subscribe via iTunes or Spotify, of course, particularly if you've got it in your portfolio. But there is an app there on the screen. It's very easy. It's app for app-1500, which is our number at iono. .iono.fm, and you put that into your phone, and the app will come up, and a little button comes up that says install. You press install, and it takes all of maybe 15 seconds. It's incredibly efficient, and then you will get access in your phone. And when you're driving in your car, you plug it into your system. Most of the cars have that nowadays, to all of our podcasts, and I can assure you that it's not just the podcast that we're producing at Biznews with our team here, but we do have the license for both the Wall Street Journal and for Bloomberg, who are heavily invested in podcasts too. So go on there, you have your audio by demand, and you will see it's a whole new world. I think once you've tasted this, it's a bit like once we've tasted PVRs or the recordings, who needs to watch live television anymore? It's a similar thing with audio. It's a revolution around the world. Something like 75% now of Americans have at least downloaded one podcast. 50% of them download a podcast once or listen to a podcast once a week at least. So it is a new field, a new area, and we're in it. app-1500.iono.fm. Go along there, download the podcast, and be very interested to get your feedback on it. But thanks, Stu, as always, and thanks to our community for coming out in numbers again today, and hopefully this has given you a little bit more perspective on what it is that's behind investing. It's a long-term game, but if you can't sleep at night, if you're looking at this turbulence in the markets, and I wouldn't blame you, and you worry about being able to manage the stress, then don't, then just get out. Just do do what you need to do to be able to sleep at night. That is the most important thing when it comes to investing. For me, I only put money in there that I can not worry about for the next 5 years, and it does seem to work. Thanks again. Until the next time, cheers.